advance rent payment for 1 year. So we're going to save and close. Now the next thing you will do, for each month you have to create a journal entry. So let's head to reports. Go to reports, go to company and financial. Let's check balance sheet. Now from here there's a prepaid rent under current asset of 12,000. Hi and welcome back to Bookify Solutions. In today's tutorial, I'll show you how to record deferred assets and liabilities in QuickBooks Desktop. As you know, this is a crucial skill for any business owner or bookkeeper that is working with prepayments or customer advances. Now, what are deferred transactions? For example, a deferred asset can be an advance payment that you make to a supplier and you've not enjoyed the service for which that payment was made. Similarly, deferred liabilities are advance payment that you receive from your customers and you've not yet delivered the service to those customers. So it's a liability because you are still owing the customer in value, in respect to the value that you are being paid. It is an asset when it comes to deferred because you paid in advance. Your cash or your money is with the supplier and you've not yet enjoyed what you paid for. So for example, prepaid insurance is a deferred asset, while customer deposit is a deferred liability. As you can see, this is in compliance with accrual accounting concept because once you make a payment, it is necessary that that payment is recorded together with the revenue that was generated in that period, whereas the advanced payment would be transferred to the next period where it will take account. So we are going to chart of account to set up prepaid rent and on-hand revenue. So you go to list, click on chart of account, then let's right click, new. Now it's going to be, since it is prepaid rent, it's going to be other current assets. You can see prepaid expenses. So click on continue. So this is going to be prepaid rent. Then save and new. The order has to be other current liability. So I'm going to select other current liability. This is for on-hand revenue. So and save and close. The next thing we're going to do is to click on right check. So I'm going to be paying from Premium Trust Bank. Let's use today's date, so 2nd of June. So on the expense tab, let's type in prepaid rent. So we are paying rent for 1 year in advance. So that should, let's see, 12,000. Okay, so you can put advance rent payment for 1 year. So we're going to save and close. Now the next thing you will do, for each month you have to create a journal entry. So let's head to reports. Go to reports, go to company and financial. Let's check balance sheet. Now from here there's a prepaid rent under current asset of 12,000 for 1 year. So this is deferred asset. First month. So how do you go about that? You go to company, go to make general journal entries, then today's date. So we're going to select, we're going to debit the prepaid, going to debit the rent expense. So let's say 1,000. That is for the month of June 2025 for the month of June 2025. Then the prepaid, we're going to credit the prepaid rent by that same 1000. So we're going to hit save and close. Now let's look. You see your profit and loss, you now have 1000 as rent expense. If you go back to balance sheet, you see that it has reduced from 12,000 to 11,000. The net income has come to reduce our owner's contribution from 100,000 to 99,000. So you do the same for July, August, September up to 12 months. Now this is based on accrual basis of accounting, where you have matching concept, where you match your revenue to your expense. Next, let's record deferred liability, that is the unearned revenue. So you go to banking and let's make a deposit. So we are depositing to the Premium Trust Bank. Then we are receiving this money from a customer. Let's use Aboki. Then from here you can type in unearned revenue. Then you can include any description whatsoever. So the amount, let's say total unearned revenue is 5,000. Okay, so you've received a deposit from a customer, but this is not attached to any transaction for now. So that's why you're using this method to record this transaction. So I'm going to go ahead, save and close. So once you've earned, let's say you've earned 1,000, but before then, let's look at our report. Prepaid rent is still 11,000. Unearned revenue, which is a liability, is 5,000 because you've not offered the service to this customer, but yet you've received the money. So let's go to general journal to make effect the 1,000 that you've earned. So we're going to debit the unearned revenue by 1,000. Let's say you've earned 1,000, and then we're going to credit revenue. I'm going to credit income account. So let's use service income account. So let me hit save and close. So let's check our reports to see the effect. So now the unearned revenue has reduced to 4,000, and if you go to profit and loss, you also see that you have a service income of 1,000 and a rent expense of 1,000, which is 0. So this is how you record deferred assets or deferred liabilities using QuickBooks Desktop, as this keeps your financials clean, accurate, and audit ready. If you find this video helpful, be sure to like, subscribe, and drop your question below. You can check the description below for a sample journal entry template, where you also have chart of account structure and the monthly amortization schedule examples.